Morning, everyone. It is 8:39 right now. Welcome back to CW Iowa Live. Lou and Jackie here, being joined by our good friend Michael Jenkins, as we are talking about the world of bankruptcy and bankruptcy law. And what are we chatting about this morning?
Well, we're going to kind of continue what we discussed last time you were here, and focusing if you own a small business.
That's
correct?
right. We touched on some of the things last time about what people should bring to see me when we discuss whether or not they should consider filing bankruptcy if they've been operating a small business and it isn't doing so well. And so last segment we discussed they should bring their debts, list them so we can see how bad off they are.
Right.
And we also talked about the importance of bringing their tax returns in if they've done them to evaluate the income of the business and see how that's doing. So the other important things that we need to look at when people come in are we'd like people to bring a profit and loss statement, and we'd like to think that we have sophisticated businesses and they have accountants that prepare these, but really that isn't mostly the case. So most people that I represent in small businesses, they have a notebook or they have things written on a piece of paper, and sometimes they're so sophisticated they may actually keep track on their computer.
Now, is that acceptable?
Sure.
Well, let's go back and kind of define what we mean by small business, because sometimes that can be a one-person operation. Correct?
Yeah, I mean, we're talking about just people that might be a one-man operation that performs certain trade services. They might be doing home remodeling, and they kind of are a jack of all trades. We might have somebody that, well, heck, realtors are self-employed and really operating their own businesses because they're not usually employed by the brokerage that they work for. They're a lot of times just self-employed people.
Okay.
And a lot of people in sales for different things will be hired as sales reps for distributors, and they're self-employed. And then there'll be bigger operations where people actually have a storefront, maybe running a plumbing supply store or electrical or heating and air conditioning type
Now, when
operation.
people come to you, is this usually their primary form of income, is a business that they're talking about, or is this a secondary type of?
In most cases, it's their primary form of earnings, and unfortunately, if they're seeing me, it's lack of earnings probably.
Right.
But we do have folks that have full-time jobs also and have been running a business sort of as a side venture, and it hasn't gone well. Personally, and it's just my own opinion, I think if a person's going to run a business, it's better that they're actually involved in the day-to-day operations of the business and not having it as sort of a side thing, because to make a business successful, it requires, at least, again, my opinion, the person's full attention. And if they're working somewhere else in a full-time job and other people are involved in keeping up with the thing, I think it just leaves a big opening for things to go bad.
So you hope that they're keeping the proper documentation that they need if they do need to come and see you, and one of those, as you said, was profits.
Profit and loss, and it's not as complicated as it sounds. I mean, really, in many of my clients, it's a matter of just taking out their checkbook, because fortunately, any of my clients that have been operating a business, at the very least, have a checking account.
Right.
And so they can keep track of the income by virtue of the fact they make deposits into that account, and most of the time those deposits are what they've earned in the business or what people have paid them for doing the different work that they do. And in the business bank account, then we can have them also just write out the different things that they're drawing out of the bank account to pay bills, pay business expenses, whether it's to pay other labor that helps them, whether it's to pay for materials, supplies, things like those things, paying for insurance, maybe paying for some advertising. So they just have to go through for the last 6 months, or maybe just in the particular year that we're working in, like 2016 right now, and start writing that stuff down. If they haven't been, it's a good time to start doing it.
Now, does it help you if they have one primary account to handle all this, where all the money goes in and all the money comes out of one primary account?
It's very helpful in being able to sort through what things are, because if you've got a spouse that's working and they're a sole proprietorship and she's just putting her paychecks in there too, and then they're paying their house payment or rent out of that account, it kind of makes it a lot more difficult to see where all the money's going. Now, if you're operating as an LLC or a corporation, as part of the requirements of actually operating a business in that way, you're supposed to actually have a separate bank account for that entity. You're not really allowed to commingle funds. It doesn't mean that people don't do it, but that isn't how it's supposed to be done. So we have our clients set out what income is coming in and expenses going out, so we can see, are you making money or are you losing money for the last 3 years? Is it time to get out? Now, sometimes we can suggest modifications in the business because our clients aren't eager to get out of business. I mean, they've poured their heart and soul into working in this thing, and it's a very, very tough thing to just call it quits and say, I give up. And so we will look at ways, is it viable to stay in business? Sometimes we look at what they're spending their money on. Are there some expenses that they can start slashing? If they do many different things, we start looking at, well, are there some things that have been profitable and other things they've just been losing money on, and determine, well, maybe we can cut out some of those things that we've been losing money on and just stick to the stuff that's worked, and see if we just stick to those things with those expenses, could we make money?
Okay.
So then the other things that's important to bring is we need our clients to bring their loan documents from their different banks. Many times there'll be one main bank that our clients been doing business with and getting their operating capital. So they'll have generally a master promissory note or several different notes, and they'll usually be a commercial security agreement that pretty much ties up all of the assets of the business. So if it's not paid, the bank can pretty much seize everything and shut the business down. Now, sometimes there'll be more than one bank involved, 2 or 3 banks. So it's just really important for us to be able to read the different loan documents, see what equipment or machinery is tied into different banks, and see if there's anything that is out there that isn't tied up with the banks, which is rare. I mean, most of these agreements are sort of forms, and they're pretty all-encompassing. They're intended to pretty much gobble up everything the person has, and so even if they don't list things specifically, it usually has a bunch of catch-all provisions that say, well, if it's not specifically listed here, anything else that you have, we're tying that up too. We want to see if there's any mortgages that have been signed. Sometimes our client's business will own the building that they do their business out of rather than just leasing it, so we'll want to see that. Another reason we want to see the mortgage documents is sometimes, either knowingly or unknowingly, our client has also put up their home as secondary collateral for their business. And I say knowingly because it's usually discussed that that's what's actually happening.
And then you said unknowingly.
Well, I've had clients, and it's probably their own fault, just because they didn't read the things that were being put in front of them. They were just told, you need to sign these if you don't want us to shut down your loans. And so they do, and they signed a document putting their home up as collateral. And so, you know, you may have your main mortgage with one of the mortgage companies, but this is another sort of blanket mortgage that goes on there that that allows them to foreclose on the property if the business loan fails. And it's all, you know, we've seen it where the loan officer didn't necessarily discuss that with the person. These are usually when loans are starting to go in a sideways direction, and everyone's desperate to try to keep the business afloat, and the bank doesn't necessarily want to pull the plug either, but they want additional protections. And so there's a mortgage against the house, and the person's there just signing away their documents.
Are you able to save them in
Good
that
question,
scenario,
yes.
or is it too late?
Well, their home oftentimes becomes a casualty. I mean, in many instances, there's not a lot of equity, so sometimes they really won't do anything with it. Just because the main mortgage is there, there's not really much equity to speak of, and it was just extra leverage. But in other instances, they will in fact enforce it. Now, they'd have to go pay off the main mortgage that was ahead of it if they wanted to enforce that. But that, you know, if there's no equity, they're not really going to do that.
Right.
And so sometimes they'll be decent about it, and if there's really no equity, after things are over, sometimes they'll just release it because there's nothing there, or they'll take a small amount of money in exchange for a release of that mortgage so it doesn't just sit there.
A lot of
Well,
things
you
to
need someone that
consider,
knows what's going on and to get ahead of the situation, so hopefully you're not stuck in that specific scenario. But in case you are, give everybody your information so they know how to reach you.
Well, you can call me at 255-1855, and we'd be happy to talk to you briefly on the phone, or you can find me on the internet at www.jankins, www.iowa-bankruptcylaw.com.
There you go, located right over on 2nd Avenue, easy to find as well. Well, interesting scenario. I never knew about the mortgage on your house. That some people didn't realize that. That's
Just
scary.
like my clients.
Yeah, that's scary.
Read
That's
the fine
frightening.
print if you've learned nothing else today.
So if you have any questions, this is the guy
Right.
you want to ask him, okay? We'll be right back, folks. It is 8:50 right now. You are watching CW Iowa Live in West Des Moines. Totally serious news. Coming up next, the winner of the wife carrying competition. Yeah, it does exist. We'll tell you who it is next.